Most Asian markets have underperformed their global peers since the start of 2021. So does the underperformance make them attractive on a valuation basis? That's the question that we're trying to answer. And let me highlight a few data points for you, which will, help us prove that Asia Pacific along with emerging market equities are available at a much more attractive valuation as compared to their global peers. Firstly, let's have a look at the MSCI World Index, which has gained about 10% since the start of this year as compared to the emerging market space, which has gained a little over 5%, and the Asia Pacific Index has gained a little over 4% as well. The US indices, which is the Dow Jones along with the Nasdaq and the S&P 500, all of them have gained more than double digit for the year itself. As compared to that, the Asian stocks have underperformed, which is the likes of the Nikkei 225, the Hang Seng along with the Nifty, which have gained about 5 to 6% each since the start of this year. Of course, there are some exceptions to this, the likes of the KOSPI along with Taiwan as well, and the FTSE Singapore Times Index, which has gained more than 10%. That are the exceptions that we are referring to. But moving on to the valuations front, let's compare the Asia Pacific valuation to that of the World Index, and then also compare the emerging market index to the World Index as well. Starting off with MSCI Asia Pacific Index, which trades at about 16 times 1 year forward earnings as compared to the MSCI World Index, which trades at about 21 times 1 year forward earnings, which means that the ratio of these two is less than 1, and therefore the Asia Pacific stocks are at a discount to the World Index. Also, the 5-year average of this ratio stands at about 0.8 times, and the current ratio being lower than that also implies that the MSCI Asia Pacific Index trades at a discount to its 5-year average valuation relative to the MSCI World Index. The current ratio also being the cheapest that we've had in over 6 months. Moving on to the emerging market space, then the MSCI Emerging Market Index trades at a 1 year forward multiple of about 15 times as compared to the MSCI World Index valuation of about 21 times, which once again implies that the emerging market equities are available at a discount as compared to the World Index. Of course, the ratio also indicates that the 5-year average is above the current ratio as well, which means that the MSCI Emerging Market Index also trades at a discount as compared to its 5-year average valuation relative to the MSCI World Index. Once again, this ratio is at the cheapest or the lowest level that we've had in over 6 months. Now, this study in fact proves that the MSCI Asia along with the emerging market equities are available at an attractive or a reasonable or a cheaper valuation as